So there's two different things, right? There's income tax withholding that again is part of the income taxes that you owe, and then you have this other thing, Social Security. Okay, so uh, it's the same thing as payroll tax. Okay, you hear this thing called multiple things: payroll tax, Social Security tax. It's all the same thing. Okay, it's all a tax that's based on your wages that you earn. Okay, uh, it's not like when you sell your house, right? You may have a capital gain, but you're not going to pay this particular tax because this is only on earned income. This is only on wage income. Okay, so again, it's synonymous with the payroll tax. So you'll hear payroll tax talked about in the news. This is what they're talking about. It's all created through this law, the Federal Insurance Contribution Act. Okay, this all started with FDR, and the Great Depression, coming out of it. The kind of setting up a bunch of social programs in America. This was like kind of during that era where all this happened. Um, and so there's two components to it. OASDI, which stands for old age, which again, once you turn like, I think 62 or 65, there's some minimum age where you can start drawing on it. And there's a maximum age where you have to start drawing on it. And the longer you wait, the more you'll get. But it's basically for old age survivors. So back in the day when this was first created, most households were single earner, right? So this protected the surviving spouse, which was usually the wife, because it was like the traditional family of like 1950 was like the husband would work and the wife was a homemaker. So this insurance was to protect the wife in case the husband died early, because again, most households in that era were single earner households. And then disability. So if you were injured or had some disability, you would have this insurance to protect you and protect your income. Okay, so that's one component. Um, the other component is Medicare, which again funds uh, medical care for seniors. Okay, so once you're 65, you will switch over to a basic form of this that's free for everyone that's over 65. There's additional like layers of it because the basic coverage is not that good, but everyone gets like the basic package once you're 65. Okay, and this part of your payroll tax is contributing to that. Okay, so OASDI is subject to a maximum. Okay, so you only pay it up to a certain level of income, and then after that, it falls off. Okay, but the limit is quite high, 176K in 2025. So the vast majority of people pay this amount in full. Okay, I think 176,000 is like probably top 5 or 10% of earners. Okay, it's quite high. So the vast majority of people in America pay the full amount of Social Security. Um, the rate is 6.2%. Okay, so out of every paycheck of your gross amount that you're earning, 6.2% will go to pay in addition this, or like rather of that gross amount, 6.2% of that is extracted from your paycheck to pay for this component, OASDI. Medicare is an additional 1.45%, and there's no limit. Okay, it's taxed up to however much you earn. And I think there's an additional amount. So over 200K, the rate also steps up. Okay, so this one is, you can argue, more progressive in that, like higher earners are going to pay more and even a higher rate, okay, as you step up. OASDI, you can say, is regressive because higher earners pay less as a percentage, okay, because there's a limit. So if you earn $500,000, only the first 176,000 is subject to this OASDI, and after that, it's like not subject to it. Okay, but again, in terms of numbers of taxpayers, it's not as many because it's like only whatever 5-7% of Americans earn over 176,000. Okay, so it's not like a large number of people that are affected by this. But in terms of dollar amount, it probably is a lot. If you collected it, if you made OASDI no limit, it would probably bring in a substantial amount more. So I think one tricky part of this chapter is figuring out how to calculate OASDI because there is a limit. Okay, so in the case where someone's paycheck crosses from one side of the limit to another, there is a special calculation that you'll have to do. Okay, so let's look at this diagram. So in this case, I think the book is like published years ago, so the OASDI limit that they have in there is like lower than it is now. So let's just assume that the limit is 118,500. So all wages earned below that are taxed at 6.2%. Any wages above that are tax-free. Okay, so at the start of the year, you're at zero. Okay, zero cumulative earnings. In this first pay period, all of your earnings are going to get OASDI. In the second period, all of it is going to get OASDI. It's going to be, if this is a $10,000, you do 10K times 6.2%. That's how much you're going to pay. Same thing with this. Okay, so we'll keep going. And then let's say at the end of pay period 3, this is how much you've earned total in the year. Okay. Now let's say that you're earning $10,000. And so from pay period 3 to 4, you're going to cross over this limit. Okay, does everyone see that? You're going to go from 114,200 to 124,200. So you're earning $10,000, but you're crossing over this border. Okay, so basically what you'll have to do is figure out from this limit, how much is it from here to here? Okay, this amount, that is going to be subject to the tax. And then from here to here, this amount is going to be tax-free. So what is the math? How should I figure out what this amount is? Exactly. Okay, so you just take the limit, you see what the balance was and the earnings up to that pay period, and if you just subtract it, you'll see what this amount is. Okay, and this amount is what you'll multiply by 6.2% to figure out how much payroll tax is owed. After this pay period, there's no OASDI because this whole paycheck is above the limit, right? It's just this paycheck that crosses over this one that you have to do some special calculation. Okay, so again, the math would be you take this limit, and this is going to change every year. Okay, this limit is a moving thing. Every year it goes up a little bit. You subtract and you only do this again in the pay period where it crosses over. All the other pay periods, like this pay period here, this full amount is going to get taxed. So you don't have to do anything special. Okay, it's only this one where it crosses the limit. Okay, so then you calculate how much is under the limit, you multiply by 6.2%, and then this is how much will be withheld from the paycheck. Medicare, there's no max, so you don't have to ever do this calculation, and then you just multiply the entire paycheck by what the rate is, 1.45%, and you'll get how much you pay for Medicare. Okay, and then the total, you just add these two up. That's the total FICA, is just the sum of these two. Because again, FICA has two components. The payroll tax has two components, Medicare and OASDI. So you need to make sure you've calculated both of them.